Well, we have a slightly more serious video today because we are talking about the car market and the middle class because, well, the middle class, frankly, is pretty much just getting screwed over. But before we get into this video, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you want to see more videos just like this, then I recommend you subscribe because I post content every single day. Let's get into it. So first off, we have to quickly describe what the middle class actually is. And well, the thing that's frustrating about describing what the middle class is there are a lot of different definitions, but most sources basically categorize the middle class by a particular income bracket. So if you are a single individual earning anywhere from like $30,000 to $90,000 per year, apparently you're in the middle class. That's what most sources say. And then if you are a family, so 3 to 4 individuals, and combined you are earning anywhere from about $60,000 to $150,000, then you are also considered middle class. But official definitions aside, when most of us picture the middle class, we just picture the average American, and that's pretty much what that term has come to represent at this point. And so that's why the middle class is so important in many people's eyes, because, well, it's the average person, and most of us happen to be the average person. And so whatever happens to the middle class, well, it's going to happen to most of us. And this leads us to talking about how the middle class is getting screwed over when it comes to purchasing a car. So to fully explain this, I have to talk about how much the middle class was screwed over the last couple of years, and then we have to talk about how they're going to continue to get screwed over the next couple of years. And so let's just dive right into it. So at this point, pretty much everyone knows that car prices increased by about 50% over the course of 2020 and 2021, and so far they've decreased by about 20-ish% over the course of 2022. And so this has actually led to a pretty interesting circumstance, especially for those in the middle class. So what happened to the average person within the middle class because of this price run up is they went from being in a situation to where they had negative equity in their car prior to COVID, where they owed more on their car than what it was worth, to then being put in a situation where they actually had positive equity on average. Whenever I talked to dealers in 2020 and in 2021, they'd always tell me that they were so shocked at like how much positive equity there was, because this was a complete flip from what they were used to prior to COVID. Prior to COVID, most dealers were used to trying to figure out how to put a car deal together with the fact that their customer owed more on their trade-in than what it was worth, and now it was completely flip-flopped. So on the surface, it looks like COVID actually helped out the middle class, but that's not reality, because these people were doing these transactions at the top of the market. So yes, they were getting top dollar for their vehicle, but then they were also paying top dollar for the vehicle that they were purchasing. Now, not all people did this. There were a bunch of circumstances where people bought brand new cars and didn't pay market adjustments on those brand new cars and actually basically put themselves in a better situation after their purchase than what they were in prior to COVID, but those cases are far and few between. And so anyways, back to the average person. Well, now they have this car that they paid top dollar for, and it's now worth about 20% less today because of the value declines that we have seen. And so this basically puts the average person in the middle class right back in the situation that they were in prior to COVID, where they owe more on their car than what it is worth. And this is the exact opposite as to what has happened with people that are just above the middle class or even a step above that. Because with these consumers, yes, the product that they purchased also went up in price, and a lot of it has also come down in price. But the big difference here is a lot of people in these higher income brackets will pay cash for cars rather than financing those vehicles. And so, yes, they could be in situations where they lost money, but they typically don't have negative equity because, again, they're usually not taking out loans on these vehicles. And so they're not hurt nearly as much as, again, the average person in the middle class, because they don't have a liability that they are paying interest on that is now worth less than what their loan amount is. And then on top of that, there are still a lot of vehicles in the high-end market that are still selling for big money. And so a lot of these, high-end buyers are still able to make quite a bit of money off of the car market, whereas the amount of cars that you can do that with in the affordable car market are very far and few between at this point. And it doesn't stop there, because interest rates have obviously also increased a massive amount. And again, for the wealthy buyers that pay cash for cars, this doesn't do anything to them because they're not paying interest, because they're paying cash. And actually the situation's helping a lot of them, because the cash that they do have sitting on the sidelines, well, it's now making more interest than what it has been over the last few years. Whereas again, your average Joe that takes out an auto loan now has to pay more interest on that auto loan. And again, they're now in a situation where their car is most likely worth less than what they owe on it from an auto loan perspective, because of the decrease in car values. And then the next thing you have to stack on top of this whole situation is the fact that a lot of automakers are no longer focusing on building affordable cars. A lot of automakers have their focus shifted towards these wealthy buyers, because that is the subset that is still able to purchase cars right now, because they're able to get around the higher interest rates. And so you have all these automakers that are basically only building expensive, fully optioned out vehicles that the average Joe can't afford. And so it's putting the average person in a position where all of the affordable cars that are available are now selling for huge market premiums, because there's not that many of them. And the cars that, could potentially have some discounts on them are still way too far out of reach, because they're just at a price point where they're being built for wealthy buyers and not for the average consumer. And if that wasn't enough to crush the middle class, a lot of companies are starting to lay off their employees. And it's not like they're laying off, the big wig CEOs. They're laying off, a lot of the entry-level positions and just, a large portion of the work class. Again, the middle class. And I know this is more on the anecdotal side of things, but a lot of business owners that I'm talking to are not getting rid of the high-skilled positions within their company. They're getting rid of the lower-skilled positions, and they're basically asking the high-skilled positions to, kind of cover some of the work that those low-skilled positions would do. An example that I'm going to give that is actually in the car world is a lot of dealers are laying off their lot techs, and now they're making their salespeople do what the lot techs do. So they're making them park cars, clean cars, all that kind of stuff that a lot technician would normally do. And again, this is going across a bunch of different industries. And so now you have, again, the middle class in a position where it's a lot harder to find work. So why am I even talking about this on a car channel? And here's the deal. The average consumer, again, the middle class, is super important for the car industry. This is literally the backbone of sales for the car industry, because yes, expensive high-end cars do allow car companies to make massive profits. But the other thing that needs to be taken into account is a lot of these car companies only exist because they also happen to sell affordable vehicles in very high volume amounts. Yes, they're not making as much money per unit. However, they're going to be selling so many that they'll typically make more money off of the volume vehicles than they will make off of the lower volume, production units that they have more profit built into them. And so, the overall economy turning away from the middle class, and then you have, automakers that are turning away from the middle class, and then you just have literally the market. And obviously the market doesn't have any sort of motive. The market just does what the market does, but the market also happens to be turning away from the middle class. It's putting us in a position where we are going to be in a place where the car market is going to absolutely explode, and not in a good way. So what I mean by this is, again, we have a lot of layoffs currently happening and more to happen in the future, which means that there are going to be less people that are able to buy a car. If you don't have a job, you can't buy a car. But it's more than that. These people are also going to be purchasing less products in the general economy, which means that the people that still have the means to purchase a car won't be making as much money, so they won't have as many means to purchase the vehicles that they are currently purchasing, which is going to put downward pressure on every single part of the car market. Now, again, this might sound like it's good for the middle class on the surface, but you have to remember that a lot of individuals within the middle class purchased vehicles over the last couple of years, because the average consumer purchases a vehicle every 2 to 3 years. And so this is going to put a lot of consumers in a position where they have even more negative equity tomorrow than they do today, which is going to ultimately screw them over even more, because even if car prices come down to where, a car is, again, affordable for the average Joe, well, in reality, it won't be affordable because the average Joe owes so much money on their car and it's not worth nearly what it was worth before, to where they're in a situation where they're basically screwed. They won't be able to buy anything. So in summary, just like in a lot of economic circumstances, the average Joe, the middle class, basically is getting screwed over because they just couldn't really reap the benefits of everything that's happened within the car market over the last couple of years. The average person doesn't have the money to go and buy and flip the expensive vehicles where there were massive profits to be made, like a lot of these wealthy buyers were able to do. Like, yeah, I've talked about how, a lot of wealthy buyers have lost quite a bit of money with some of these luxury cars, like the G-Wagon, for example, that lost like, $100,000 in value over the course of the 2022 sales year on average with a lot of the different models. But on the same token, there are a lot of buyers that, were making, that much money on certain transactions because they happen to buy a car at a dealer for MSRP and then they sold it for way over MSRP at another dealer. Like there are all sorts of things that happen. And so like, I would never feel bad for the wealthy buyers. But again, the average Joe, yeah, a lot of sympathy for them because a lot of them, might have gotten a deal where they got more money for their car at the peak of the pandemic, but then they also, again, paid more money for the car that they purchased. And so they're just basically right at square one again. And so the only way that this situation is truly going to remedy itself is with some sort of massive correction with regular cars. So first off, automakers need to focus on building affordable cars again. Like the whole thing of automakers focusing on these high-end buyers, in the short term, it might benefit them a little bit, but it's already starting to backfire. I mean, look at like Stellantis, for example. Like Jeep focused on building so many, luxury versions of the Grand Cherokee, and now they're in a situation where Jeep dealerships are full of Grand Cherokees that they can't sell because people don't want to spend $70,000, $80,000 on a Grand Cherokee. I'm not saying that the vehicle's not worth it, but I'm just saying that I shouldn't say they don't want to spend it. I'm saying they can't afford to spend that amount of money on that vehicle. And so you're just going to see bigger incentives on vehicles because this manufacturer's focusing on building affordable vehicles. They're not going to do it right away, but trust me, when they start to see the sales numbers continue to decline throughout the course of next year, they're going to shift gears and they're going to want to start to build more affordable cars, especially when they look at the used car market and you see that, the cheap cars are the ones that are selling fast and they're selling for big money compared to what they actually are. I mean, we're in a market where you can get like $10,000 off of the MSRP of like something like a Ram 1500 truck, right? But then if you want to go buy a Toyota Corolla hybrid, you have to spend like $2,000 to $5,000 over MSRP on the vehicle. So there's going to be a much bigger focus on affordable cars that needs to happen. There's going to be correction when it comes to pricing, especially to move all this expensive inventory that manufacturers have decided to build because they thought that they should focus on luxury buyers, when in reality, focusing on the average Joe is always the most important thing because that's where most of the sales can be made. I want you guys to let me know what you think about this whole situation and frankly, what you're doing to prepare for the whole situation that's going to be happening over the next year. And with that being said, I'll see you.